We are joined by Adam Button, Chief Currency Analyst at Forex Live. Thanks so much for joining us, Adam.
Good afternoon, Jackie.
So how would you describe what we're seeing with the U.S. dollar right now?
Right. Bank of America does a fund manager survey every quarter, and they described it as the most crowded trade in the whole coverage universe in that survey. So the dollar was extraordinarily crowded. It was really the one trade that was working this year across all asset classes. And so when you get a reason to rush to the exits, you can see what happens. It's been a dramatic unwind since that CPI report. And this could just be the beginning. If this cycle is turning, the dollar will be in decline for years to come. It's not entirely sure we're at the top of that cycle yet. But I think we've probably seen certainly the easy gains in the U.S. dollar.
Yeah, that's the big question, right? Have we passed peak dollar? You mentioned all of the people perhaps rushing for the exits. What sort of implications does it have when the dollar falls this much this quickly?
Right. So we priced in here peak inflation in the U.S. Right now we have to look at the growth outlook. So there's an ongoing debate in the market whether this is going to be a soft landing or a hard landing. So we'll be turning to economic data now. Now, in terms of implications, say you're the Bank of Canada, you like to see this. That's imported inflation is going to decline now. So the price of anything priced in U.S. dollars is going to improve. And that's the same in Japan, in Europe, everywhere else in the world. Emerging markets are particularly struggling with inflation. So this will certainly be welcome news to them. And it's a reason to celebrate for all of them, and it means maybe they have to hike a little bit less.
How quickly do you think we would see that sort of a ripple effect in terms of, a stronger Canadian dollar helping the inflation situation?
Yeah, I mean, it's a modest impact. I think that, the Bank of Canada, for them, it's more, okay, it's not falling anymore, right? But if it were to fall to, 65 cents or something like that, then you really start to import inflation. So now it's, at least steady, now moving in the other direction. It's a small help. I think there's a lot of things going on in the bigger picture that they're paying more, closer attention to. We've watched inflation. You can see yesterday just the impact that inflation report had on the market. And I think that's the market saying, well, we're not going to have to hike rates to like 6%. Maybe 5, maybe 5.25, 4.75, something like that in the U.S., a little bit less in Canada. So we can put a cap on that right now, and that's a sigh of relief. Now we say, okay, well, how bad is it going to get? We've heard about a lot of layoffs this week. What's it going to look like into next year? So how quickly does this decline? Because we've never had, in generations, such a quick interest rate hiking cycle. And that's a lot of pain in the pipeline. And it remains to be seen how much that's going to hurt Canada and the global economy.
Yeah, when it comes to the U.S. dollar's trajectory, it was so strong at its peak this year. It climbed so much. It was such a focus. How quickly do you think it unwinds? You said we could be seeing it falling for quite some time, but do you think that we'll see some of this, pretty swift reaction that we've seen in the past 2 days continue?
I think this is probably towards the end of it. I mean, you've priced out a full rate hike, maybe 2 rate hikes out of the U.S. or those tail risks as well. So I think that's probably enough for now. And it'll come back then to the growth picture. I mean, every economic data release from here on out is to determine whether this is a hard landing or a soft landing. If it's a hard landing, the U.S. is going to do better. Now, in the global picture, there's a lot of things going for the Canadian dollar along with that. If it's a global kind of hard landing, well, Canada and the U.S. are going to do a little bit better. There's a lot of stimulus in the pipeline in terms of infrastructure in the U.S. Eventually China is going to be opening up. I think that's a lot of the trade we're seeing now as well, is looking beyond COVID-0 in China and saying, okay, that's going to open up. But, these rates are going to hit hard. They might hit hard in Canada, in the housing market. We have to kind of find a bottom in a lot of these things now. So we've seen a peak in inflation. Now we have to see a bottom in the economy. And then it's going to be liftoff for the Canadian dollar. And you'll see that broad U.S. dollar weakness. And that's probably 6 months away, hopefully.
And the Canadian dollar isn't the only one that's strengthening as a result of the weakening U.S. dollar. The yen is also gaining some of that strength that Japan has been been, wanting, having, intervened in its currency market recently to try to prop up the yen. What does this mean for Japan, do you think?
I mean, these moves in the end have been spectacular. I mean, they're once in a generation, or at least once in a market cycle kind of moves. They've been begging for this. Now, they've been intervening. It's tough to intervene when you're fighting the market, right? So now, if they really want to come in with the hammer, now would be a good time to intervene, or next week. They're also in a tough position where they're fighting some inflation that's brewing now too. I mean, it's unfathomable to me that inflation in Japan's still 2% when the currency's fallen 30% this year and commodities have skyrocketed. I mean, they're facing a lot of the same pressures as everyone else. They need to get away from rock bottom rates at some point. So maybe this opens the door to that. And in that case, we could have another week like this whenever they make that sort of pull the trigger on that. I would argue to do it sooner rather than later, but they're very hard things to predict, currency intervention and whatnot. But again, that was an extraordinarily crowded trade that's been blown up this week.